Hello and welcome to the Can I Retire Now podcast with your hosts, Nick Russell and Becky Wagoner. I'm your podcast producer, RJ Malik. Nick and Becky, as always, it's so great to see the both of you, and we're getting ready for another podcast. Nick, why don't you tell us what you and Becky will be talking about on this edition of Can I Retire Now?
Thanks, RJ. So, today we are going to cover an immensely exciting topic.
Nice.
What happens if I die?
Oh, that's exciting. Not for me.
No. Okay.
Okay.
We can kill you in this example, if that makes it
Someone
exciting.
has to die no matter what.
Well, we're going to talk about life insurance. And life
Oh,
insurance
gosh.
only pays out if someone is not living anymore.
Perishes. Okay.
Yeah. So
Exciting is not the adjective I would have used, but yeah. Okay. Let's talk about it in the unlikely and unfortunate event someone dies.
Okay.
Life insurance.
So I wanted to think of a good way to do like an intro life insurance because there are tons of different types of policies and all this stuff.
It seems like a really dense topic.
It is.
And one that has never been appealing to me. So I'm glad you know about it.
I'll be honest, it's not appealing to anybody. No one ever wants to talk about life
No.
insurance.
No, that's a good way to kill a vibe.
Hey, I see what you did there. So I thought I'd pull a Becky. I did some research.
What?
I know. I wanted.
I really did die. Am I
Yeah,
dreaming? Okay.
You're dreaming. You're dreaming now. Yeah.
Dreaming.
This
Okay.
is the afterlife where I
Oh.
turn into you.
Okay.
So I looked up the history of life insurance because I figured if we're going to talk about this, let's figure out how this all started.
Start from the very beginning. Okay.
You are going to love this because life insurance has ancient roots.
Ancient.
The earliest forms of life insurance date back to ancient Rome.
Stop it.
Remember
The
when-
Romans invented life
Remember
insurance?
when we talked about annuities? It was like the same thing. It was from way back in the day. Way back when the soldiers called them burial clubs, I believe it was called, where
Burial clubs. Oh my gosh,
Yeah.
I do love this.
Yeah.
Okay.
So this was a way to help families of fallen soldiers. So they'd raise money and then
Okay.
pull out money and make sure that spouses and kids of fallen soldiers were taken care of. If you fast forward all the way to the early 1700s,
Okay.
which obviously a big gap there, the first official life insurance company was founded. It was called the Amicable Society for Perpetual Assurance Office.
What is that acronym? Anything good?
APAO.
No, that's
I
nothing
can't
good.
do anything. with
Okay.
that. No. I was not prepared for an acronym.
Well, I
but-
thought if they named it something so crazy, it would have like spelled something like Lifeco or something. But
No, I think that comes like way later when marketing and TV was a thing.
All right.
But it was established in London. It was a structured, what we think of insurance companies now. So why life insurance?
why life insurance? Indeed.
Right? Life insurance is there to protect the survivors of the person that passed away financially to make sure that they can survive without them. Right? So if you think of that,
Yeah.
if I were to ask you, if I passed away today,
Hmm.
how would you feel? Other than devastated, of course.
I don't even know, but I know because we have set up, we have done a trust, we've done our life insurance and everything like that. So besides being completely devastated, I would feel overwhelmed, but in a way, okay, because I would need to figure out how to get life insurance. I think I feel like I am failing this question. Pass.
No, honestly, I'll use the term fumbling a little bit, but that you are is actually probably a very common answer. Like people don't know.
Yeah, I wouldn't know what step to take next. Honestly, I would probably contact someone you work with that also knows about life insurance.
And what if I didn't have life insurance and I passed?
Bad news. Very sad day. I would feel a lot less steady and unsure and just completely flipped over. Yeah.
Okay.
Mhm.
So I asked those questions because I'm going to spit out a couple of facts here about life insurance.
Okay.
Then I thought we would talk about kind of the basic types,
Hmm.
different types, and then kind of walk through why we would cover how much to get. that kind of
Yeah.
stuff.
Okay.
So conceptually, life insurance is there to pay out a financial benefit if the insured is passes away.
Got it. Okay.
That insurance benefit, by the way, is in most cases tax-free.
This is the only thing ever that's tax-free,
In
but
most
you have
cases.
to die for it?
Yeah.
That's
once you die.
bum deal.
Yeah.
Okay.
And I don't even get it tax-free. You would get it if I die. So yeah, I just have to take care of you, I guess.
I guess that was the line. Okay.
Yeah, but it helps because it's normally when someone passes away, the first benefit that's received. It's usually paid out within 30 days. Insurance companies are very quick to do that. So it does help create some financial stability
During a major life transition.
during, obviously, a major stressful event.
Okay.
But let me give you a couple quick facts. We talk about the breadwinner impact with life insurance all the time.
Mm-hmm.
So over 35% of American households would feel some kind of financial strain within a month if the primary earner passed away.
I totally believe that.
Yeah.
Absolutely.
So if I passed away and I didn't have life insurance, we have assets, we have savings.
I would need to scramble and figure out a way to get some income real quick.
Right? And that's probably the last thing you want to think about. Right?
I'm sure setting up interviews is not like high on my list at that point, but it would have to be. So
we talk about trends with life insurance. So about 60% of adults today have some form of life insurance.
That's better than I thought.
Yeah, most of which is through group coverage or something offered by their employer.
Makes sense.
So employer coverage is nice because it's usually very inexpensive. It's available. There's no underwriting. So you don't have to be in perfect
Just
health.
sign up and let them take the $10 a month and move on or whatever it costs. Okay.
Downside of that is you change your job, you lose that coverage. You retire, you lose that coverage. So a lot of people have gotten very dependent on the employer coverage. But as you know, a lot of people change jobs now. I think the average person changes jobs 7 or 8 times in their career.
Okay.
Those benefits are going to be in flux in every one of those job changes. Now, around 50 million people in the U.S. believe that they need more life insurance coverage, that they are not covering enough. They're not leaving enough to their beneficiaries if they were to pass away.
Interesting. So they have life insurance, but they didn't get the right amount.
They feel like they're short. Yeah.
I wonder why they would have made that decision to short themselves, though. If you've gone that step, why not take the whole?
So let's say you're working and your employer offers you 1 times your salary, right? So you get your 1-time salary. Maybe it's even free.
And that's just what's available.
Yeah. And they get it. And they never look to go get more coverage because that's there. It's readily available, free or cheap.
They didn't have the option to.
Well,
easily.
But yeah, they would have to go find an insurance agent or financial advisor.
Okay.
So less employers are offering life insurance today as an employer benefit than 20 years ago, about 25% less. But there were about $16 billion with a B dollars paid in insurance premiums for life insurance last year.
Paid. So people submitted that money. Do we know how much was paid out, like benefited?
I don't, but I do have some interesting facts for you on that.
So we're having better, I think, statistics on life insurance than we are in retirement savings.
It feels that way. And do you have any ideas why?
I think it's less expensive.
Bingo. So if you asked me to pay $5 a pay period for some kind of life insurance benefit, I'm doing that. If you asked me to put away 10% of my salary in a 401k, even though I'm getting a match,
it's more painful.
It's more money and you don't get that immediate gratification. I mean, you don't get it with life insurance either, but hopefully not. But you're right. I think just because the actual dollar commitment is less, people say, well, I'll do this because I can't do that. Or I can only do one.
Oh, I see. Yeah. I think I had life insurance when I worked at the university.
You did?
Oh.
I checked your employer benefits.
Somebody did.
Yeah.
Good. Okay.
So nice job.
Good job. Go me. Okay. All right. So people are more likely to do this, it seems, than say for retirement because it is the less painful of the options.
Correct. Now it is, they're still not covering what they need to cover.
What stinks is it's the less painful, but you literally you don't get to see any of that benefit. You just have to die.
Correct.
Well, that's something.
A bummer. So with that information, let's take a step back and talk about the 2 major types of life insurance.
Yes.
So, and these terms may be familiar to you or not, but how I think about life insurance, I think about term insurance
I've heard that.
and permanent insurance.
Okay.
So term insurance is by far the most common. It's technically what you have when you have group coverage. You have insurance for a period of time or a term. With work, you have it for, it's basically a 1-year term, and then it renews. But most commonly, if you go out and buy life insurance on your own, you can get a 10, a 15, a 20, even based on your age, maybe a 30-year term of coverage.
Okay.
So in short, in a very simple case, and there's obviously a million different iterations, but you would pay a premium monthly or annually. And let's say, you pay $50 a month. If you pass away within that period of time, your, say, $500,000 of coverage will pay out your beneficiary. If you live longer than that period, you can continue the coverage, but usually the premiums then get jacked up, and you're normally going to let it expire after that period.
Okay.
But a very easy, very inexpensive way to get some coverage.
All right.
Permanent coverage, as the name
coverage
kind of states, it's meant to last forever. So here you have whole life insurance, universal life.
Those are the terms I've heard, not permanent.
Yeah.
Okay.
So they kind of all fall in the same basket because they all kind of function the same.
Okay.
But those are what the individual policies are called.
So universal, what were the other words you used?
Whole life.
Whole life.
Universal life. Variable universal life. Kind of the main three.
And those are permanent.
Permanent.
So I would assume those would be more expensive because you are more likely to die the older you become.
Yes. Well, technically, we're all guaranteed to die.
It is true.
So if you have a permanent policy, it kind of states that it will pay out. Term will only pay out if you die within the period.
I see.
So you're right. It usually takes a larger dollar commitment, not only because it's meant to last forever, but every one of those policies, it's not a transactional premium like a term policy. Like if you're the insurance company with a term policy, I pay you a premium. You just pay my beneficiaries when I die.
If I die.
If I die in that period.
Okay.
Right? With permanent, that $50 premium I was talking about with term, maybe it's a $200 premium. Now, $50, $60 goes to pay for the cost of the insurance.
Yeah.
The rest of that money goes in a separate bucket.
What?
Yeah.
What kind of bucket?
The bucket's inside the policy. We usually call it a cash value. But each of those types of policies do something a little different. They either think of it like a savings account, a CD, or even variable life. That money gets invested in the stock market.
This is brand new information.
Yeah, it is for most people.
Okay.
So the idea there is you put enough in to pay for the coverage and to an extra to accumulate some kind of cash balance.
Okay, for when you die, not if you die. Because it's...
So technically, the cash balance can be used later in life. You can withdraw money from your life insurance policy. You can stop paying premiums later in life and let the cash value pay for the policy itself.
Really?
Yeah. So a lot of the ones that we've set up, especially with younger clients, we set it up so they stop paying premiums when they retire. So we want to accumulate.
That's a good setup.
Right. Because then you basically have a policy that's already paid for. And again, you have it forever, so you know it's going to pay out.
That's a really good setup.
Yeah. Now, unfortunately, most insurance agents and most people don't run the illustrations that way. And they kind of show the insured paying the minimum premium or like an okay premium. Because again, it's about money, right? If I tell you, oh, it's $50 a month, or I tell you, oh, it's $200 a month. You go, I don't want to pay $200 for life insurance. You're thinking short term. You're not thinking
whole life.
What does this look like for your whole life?
Yeah, no.
Can you tell where they got that name from?
Yeah.
So not that permanent's better or term is better. A lot of times I'll have clients who use a combination of both.
Can you have more than one policy?
Absolutely. You have as much life insurance as you want. The insurance companies are going to take your money, so you can have as much coverage as you want.
All right. But at some point, does it become suspicious?
Yes. So you can normally insurance companies, I'd even prep this. That was a great question. So normally insurance companies will only insure you for a certain multiple of your household income.
I mean, that makes sense.
Right? So if I make $100,000 a year, I can't apply for a $20 million policy because that feels suspicious.
Suspicious and excessive.
Yeah. So
That sounds like someone's plotting.
yeah, right. So, term insurance, like we'll use permanent insurance so that somebody has some coverage throughout their entire life. And we'll use term insurance a lot of cases for the periods of time where their needs are higher. So while you have a child in the house.
Usually when you're younger, actively working and bringing in, accumulating. When you're in the accumulating years, as opposed to the opposite of that, the
Look at this.
withdrawing
We've been
years.
almost doing this a year, and you're like picking up on this stuff, man.
It only took a year.
So those are kind of the general things. And I think in a future conversation, we could really dive into why you would use one, strategies to use one, because there's ways to transfer assets to your heirs, the life insurance, so that taxable assets become tax-free. There's a lot of fun stuff you can do.
Ooh.
Yeah, I know. I figured you'd like that because, you'd hate paying taxes.
I don't think anyone's like jumping for joy to pay taxes. First of all, I'm not alone in that. I understand the purpose, but
I don't like paying taxes.
it feels like a lot of taxes. Anyway.
Yeah. So obviously there's a million different nuances that we can dive into. But let's talk about some general mistakes that people make with life insurance.
Okay.
One, we talked about it, they're undercovered.
Undercovered.
Right?
So like
you don't have enough coverage.
So if you do pass away, it doesn't cover what you need to either continue living the way you want to live or the expenses you're going to have. Okay.
Correct.
So is there like a formula to figure out how much coverage you need?
And we're going to get into that.
Oh, okay.
You're jumping ahead.
Sorry.
Great segue, but I have some interesting stuff to share here, Becky.
All right. Hit me with number 2.
Are you shocked that a life insurance conversation feels like it's dragging on? No, it's okay. This is exciting stuff. So most Americans are undercovered, like I mentioned. Estimates suggest that 100 million adults in the U.S. either lack life insurance entirely or believe that they need more coverage. So that's not even an insurance agent saying you need more coverage. They know
it themselves.
21% of current policyholders feel their coverage is insufficient. So a lot of insufficientness.
All right.
But here's an interesting fact. Term insurance
Mm-hmm.
covers you for a period of time.
That's the definition.
What percent of those policies do you think pay out a death benefit?
I would say 17%.
That is very low.
Really?
But very high for the actual answer.
Is it accurate? I don't.
It's 2%.
Only 2%?
2%.
I bet those 2% are happy to have it. So.
Well, not the dead person, but the survivors. Yeah.
Okay.
Why do you think it's only 2%? Any ideas?
I think the likelihood of you dying while you have term life insurance younger is just lower, right? Like you have it in your working years. So let's say finally you turn 30, you have kids, you're like, oh, I should get life insurance or whatever. And then you have it till you're like 50. And obviously the death rate hopefully is lower during those years.
You're absolutely right.
Okay.
You're absolutely right. People tend to outlive the term. Right?
That's a simpler way to say it.
Which is a great thing.
Yeah.
So the immediate reaction for a lot of people is, why do I even need term? And you're absolutely right. That 2% of the time, think about like why we have home insurance.
Something feels better than nothing.
Correct.
Okay.
It is critically important that you have it, especially in those high needs years.
Yeah.
Kids in the house, mortgages, that kind of stuff.
Okay.
So what percent of permanent life insurance policies do you think pay out a death benefit?
100%.
You would think.
Everybody dies.
Everybody dies. The answer is shockingly 20%.
What are the 80% doing wrong?
The 80% are surrendering the policy, letting it lapse, or cashing it out before the insured
All right.
passed away.
So 2 of those are by your own, actually all 3 of them.
All 3 of them.
All 3 of them say, I'm done with this permanent life insurance.
Yep.
And for whatever reason, you don't have the money or you want the money early.
Correct. They either want the cash value out of it.
Wow.
They decide they don't want the death benefit anymore, or they literally can't afford or don't pay the premiums. Now, the sad thing about that is my mom had a permanent life insurance policy. She had a whole life policy from when I was born. She got it or before I was born. And it was, maybe it was like 10 years ago or something. I didn't know my mom even had this.
Mm-hmm.
She brought it up with me to review.
Yeah.
And I looked at it And I could tell by looking at it that the premium she's been paying at that point for 35 years,
Yeah.
if she continued to pay that premium, the cash value would not be enough to keep the policy alive for her life. The cost of the insurance was more than what she was paying. Now, when she started it, the cost was less. But as she got older, the cost to have the insurance went up. But she kept paying the same amount. So that cash value started to decrease. So my mom, had she not shown me this,
Would it
within
kept paying her?
3 or 4 years, that policy, she would have got a notice from the insurance company saying, hey, there's no more cash value. Write a check for $10,000, $15,000
What?
and fill this back up.
What do you mean by cash value? What do you like? The amount she would have been had she died been less than what I would assume you're paying every year. Why doesn't that go in a bucket if it's life insurance? I'm so confused.
Yeah. So imagine, let's give a real simple example. You have $100,000 death benefit.
Got it.
When that person dies, the beneficiaries get $100,000.
Okay.
That number doesn't change.
Uh-huh.
With a term policy, you're going to pay that same, let's say, $50 a month for the entire term.
Mhm.
With a permanent policy, let's say they turned around and said, great, give us $100 a month. $50 for the coverage, $50 will go in your cash bucket.
Yeah.
The problem is every year with permanent life insurance, the cost of the insurance goes up as you age.
Cost to who? To me?
You,
The payer?
the insurer. Yeah, the insured. Yeah.
Oh, because you're more like
'Cause you
closer
get
to
you're
death.
older.
Okay.
Because you get older.
So instead of being $100 a
So
month.
instead of $50,
Mm-hmm.
it's say $51. So now of your 100 that you're paying, 51 goes to insurance company, only 49 goes in the cash bucket.
Mm-hmm.
And then every year that becomes more and more of an
Okay.
issue. And eventually when the insurance is $150 a month and you're only putting in 100, you can see that the cash value starts to
Okay.
If done correctly, you can set it up so you have enough cash value that it'll pay for itself.
Yeah.
But 30, 40 years ago, that was never explained, right, to my mom.
Mm-hmm.
So my mom did something I recommended that in order to keep the policy without having to pay some exorbitant chunk of money,
Mm-hmm.
we actually reduced the death benefit. We actually cut her death benefit in half, which
Okay.
kept her premium about what it was, and now will last forever.
And there will be a benefit.
There will be a benefit. So when people lapse their policies or surrender them, a lot of times they're not considering modifying.
I was going to
the
say, I had
policy.
no idea you could modify it. I
See-
thought it was like a take it or leave it situation.
Yeah. So there's policies that you can convert term to permanent. There's policies where in most cases you could take that death benefit, reduce it. There are restrictions, like you can only reduce it. You have to wait a year to reduce it. You can only reduce it by so much. But that might be an option. If it's important for you to still have coverage, but now all of a sudden the premiums are out of hand,
Mm-hmm.
maybe we reduce the death benefit. There's no underwriting. There's nothing. So if you're thinking, well, I'm 30 years older, there's no way I'm going to get the same coverage. Don't apply for a new policy. Maybe we could just modify your existing one. This is why
Helpful information.
Yeah, that's why people always think about investment reviews. Insurance reviews are really important.
Yeah, I had no idea.
Yeah. So I didn't mean to dive that much into that, but
Okay.
let me give you some key things to consider with life insurance. Again, we're at 101 level,
Okay.
but let's some things. You asked before about how much coverage, what kind of things you want to cover. So a good rule of thumb is you should first look at replacing your income. So if I were to pass away,
Mm-hmm.
I want to make sure that you get enough money that will generate enough income for you to still pay the bills,
Mm-hmm.
send the kiddo to college,
Yeah.
not have to worry about surviving. I don't
Okay.
need to make you rich,
No.
right? You can go
No.
find somebody else. You're a nice woman, but but you need to cover the income. So we're usually looking at 10 to 15 times annual income.
Yikes.
What do you think about it? You make $100,000 a year, it's $1 million of coverage is 10 times.
Okay, so then invest $1 million and then it yields a income, or are we just talking like to get me through the next 10, 15? Either way.
Oh,
but
no, in that case, yeah. If I were
it's
to
kind of
die
both.
and you got $1 million tax free, you could do something with that $1 million to generate an income that would cover you. Yeah.
Okay. That's a lot more than I thought you
Yeah,
paid.
and that's why there's so many people that are short.
I was like 3x? No, 10 to 15x.
Well,
Okay.
you don't need to share this on podcast, but think about what we make as an income.
No, I'm thinking about what I made when I worked at the university.
So so what you made at the university,
Mm-hmm.
if you had 3x of a death benefit and you passed away,
Yeah.
how long would that last me? Paying the
Well,
bills.
I know. Look,
Sending
now,
the kids to
you,
college.
Mr. Posh over here. No, anyway, it probably would have lasted 3 years.
Well, yeah. I mean, I would have used it to pay bills or this or that.
Yeah, yeah,
And
yeah.
we're kind of different. We live well within our means, but a
Mhm.
lot of people that are, 2 paychecks away from bankruptcy or,
Yeah.
that it makes a big difference.
It does. Okay.
So you should consider also any kind of debt or financial obligations. We have a few rental properties
Mhm.
that have mortgages on them. Now they're cash flow positive. You can't always depend on that.
No.
So maybe a little extra. So there's a reserve there
Okay.
if something were to happen. Living expenses for dependents. So if you're caring for a parent or children, any other kinds of expenses that may come up there.
Mm-hmm.
Specifically with kids, do you want to send them to college? Most people want to send their kids to college. Well, if I were to pass away, financially, it'd be a lot tougher for us to send her to college.
Mhm.
Send her to college. So maybe a chunk of money that's dedicated for
Okay.
that. Consider if you have existing policies like your work policy. So if you have something at work that's 3 times your salary,
Mm-hmm.
we'll just cover the gap, cover the difference. You don't need to cover everything on top of that.
Oh, I see.
Consider the different types. So again, do you need $1 million of permanent, coverage?
Yeah.
Probably not.
Find the combination that works.
Yeah, maybe you have 200,000 or 250,000 that you'll have for your entire life, and you get those term policies to sit on top and expire as kids go off to college, as you pay off the mortgage.
Ideally, your expenses
shrink. And as you get closer to retirement and your assets go up, you have less of a need for life insurance. So that's where you grab those death benefits and you start reducing them.
Math.
And you save the premiums.
Okay. That's what you do. Yeah.
And then review it, right? Life changes. So you have more kids, job changes, all of that.
Divorce, move.
Yeah.
Okay.
Yeah.
Nice.
So those are the things I would consider when people are asking, well, how much coverage is the right amount of coverage?
Mm-hmm.
It's like as someone asking, how much money do I need for retirement? It's so dependent on a lot of different factors.
Yeah.
But I think that kind of covers the general ideas.
Mm-hmm.
People have coverage generally, don't have enough. They don't understand the different types.
Mm-hmm.
Those permanent policies, because they have that extra layer of cash value, a lot of times need to be reviewed on an annual basis. But most insurance agents recommend the policies and then
peace out.
Yeah, you never see them again.
Okay.
Right. So if you're working with an advisor, especially like an advisor like me that's licensed as an insurance agent as well and does that as part of their comprehensive planning, that's something that should be reviewed on a regular basis, and then make adjustments as necessary.
So when does it not pay out, Nick?
Oh, there are occasions where life insurance will not pay a death benefit.
All right. And I know one of these.
Yeah. One of them is suicide. If you get a life insurance policy and you commit suicide in the first 2 years of having the policy, it will not pay out a benefit to your beneficiaries.
But after 2 years, it will?
It will. Because the insurance companies have figured out that if you're thinking about committing suicide, you're going to if you get a life insurance policy, you're going to do it in the next couple of months. Right. So they figured out that no one's thinking, I'm going to commit suicide in 2 years. Right. That's not like a reasonable thought.
That makes sense.
So suicide's off the table. Next one is act of war. So it's important for all our vets.
Act of war.
Yeah.
Okay.
So there are specific insurance companies, USAA and a few others, that will insure
someone going
in
to
military
war
service,
Mm-hmm.
right? So, but a traditional policy, they'll ask, do you serve in the armed forces?
Yeah.
It also falls, by the way, people that carry a gun, like police officers, security guards, firemen.
All right.
Again, insurance, not that they carry guns, but dangerous professions. There are certain insurers that we look for because they will cover those types of occupations.
Got it.
Someone like me that just sits in an office all day, any insurance company will take me, right?
Okay.
And the last one is if you're committing a felony. So if you die committing a felony.
If I die committing a felony, they won't pay.
They will not pay out. So if I, it's got really violent all of a sudden, but I'm thinking like
you started off with murdering one of us. So, I mean, I think it's kind of kept to the pace, if I'm being honest.
Yeah, if I rob a bank, so I'm committing which I assume would be a felony with a gun, and someone shoots me and kills me, you will not get my life insurance because I was committing a felony. I promise to not commit felonies, by the way. You'll get it when the time's right.
All right.
Hopefully way later.
Through up and up level means.
Correct.
Okay.
Correct. So those are when life insurance doesn't pay out. Otherwise, it is probably one of the most predictable, easiest things to
Interesting.
guarantee that someone can get.
All right.
Yeah.
Sounds good. And no one, what if, well, I guess there's a bunch of nuances about murder and stuff like that. If you're murdered, legitimately murdered by someone outside your family, not fraud, right? Because fraud's
Yeah, not fraud, but
Okay.
no, if someone murders you, yeah, you passed away. Yeah.
Oh, okay.
You have something in your hands there. You've said very little.
Yeah.
Yes, I know this is not your expertise, but I'm looking at that piece of paper in your hands, and there's some highlighted marks.
Well, this kind of bridges the gap here between like this is life insurance fraud. So
Okay.
this is people that have tried to benefit from their own life insurance. So as in the most likely scenario is faking their own death. Okay. But the insurance companies caught on.
Wasn't there that guy in the news that just did that? He like went off to.
He did.
He left
Yeah,
his
he
wife-
pretended he was like a paddle boat thing. I mean, those guys are just wimps. Just file for divorce. Come on. Guys are such wimps. Anyway.
Guys are wimps. The title of our next podcast.
Yeah. Okay. I have personal feelings about this. Okay. Life insurance fraud. Craziest things. In 2005, a guy named Anthony McElrain faked his own death by impersonating his wife and then claiming that he'd been killed after being struck by a cabbage truck while traveling in Honduras. Okay.
A lot to unpack there.
So anyway, all I'm going to say is this guy, he was like, I'm going to claim it. I'm going to pretend I'm my own wife and like submit the claim to get it. Do you know how he was caught? Why they were like, you're not really dead, sir.
No.
Okay. This is real elementary. They dusted the death certificate he submitted for fingerprints, and they were his own fingerprints.
Oh my God.
You cannot submit a death certificate with your own fingerprints on it because that means you're alive.
Wow.
Yeah.
Yeah,
So-
I guess very few dead people touch their own death certificate.
yes.
Probably
He went to
Yeah.
prison.
Oh.
And then I just have two other ones. Well, maybe even just one. This one couple was like, yeah, we're going to get the life insurance and pretend that you're dead, like husband and wife. Like
Oh, they're on it together.
they're in it
Okay.
together. So they dug up a corpse,
First thing I would do. Yeah.
dressed it in the husband's clothes,
Naturally.
put his IDs in the pocket,
Of course.
put it in a car, pushed it off a cliff.
Okay.
They thought, oh, this is going to like be an inferno, so they can't like get any information. No, it did not set ablaze upon falling off the cliff. Did they abandon this scheme? No, not yet.
Oh, man.
They went down and set
Set
the car on
Yep.
fire,
Yeah.
then still tried to claim life insurance.
Did they not watch any TV shows in the last 30 years?
No,
Let me guess. Dental records?
no, there were no skid marks. So like
Oh, they knew
the police
car-
were like, something's up. And then they figured out that the car's fire started with lighter fluid,
Like
barbecue
itself.
lighter fluid in the front seat, not in the engine.
Guys, watch CSI. No,
Yeah,
I'm not
it's-
encouraging.
No,
that.
no.
It's-
And then there was just people that tried to take advantage of a homeless man. So they took out life insurance policies on this homeless man and then proceeded various ways to induce death upon him without him knowing. Yeah,
Whoa.
like feeding him excessive amounts of alcohol and like tack-ridden sandwiches. Like
I can't believe they got that policy approved, because something that we didn't talk about is if you're
yeah.
I can be the owner on your policy.
Mm-hmm.
A lot of times I'll be the owner on my policy, you'll be the owner on yours, and we're each other's beneficiaries. But I could actually be the owner of your policy, but you need something called insurable interest.
Mm.
So I wonder how they got, that's the insurance company, man. I wonder how they got a policy on someone who
This
arguably
feels-
would be like a,
Yeah, feels like from a long time ago, he might have been coerced into signing it. Anyway, they were doomed from the start and ended up being named the Murder Pact or the Murder Club or something like that. Anyway, it was all found out.
the
And-
murder club.
Yeah, these like guys were like, what if we just team up against this poor?
Wow.
Yeah, it was a
Wow.
bummer.
So I started this episode by talking about one of us dying.
And now I'm killing off homeless people.
Yeah, wow. This
I'm not. The Murder Pact is.
this is, if this isn't like, we need like a Ray of Sunshine episode.
Well,
I wanna-
don't worry. We're not going to do it because Nick and I have a long-standing no murder, no abandonment clause in our relationship.
Oh my God. Yeah.
So don't worry. You're safe. We
Is
shook
that
on
is
it.
that all?
We shook on it like a dozen years ago. Our first trip together, we went to Maine.
Bar
And
Harbor, Acadia National Park. I would highly recommend.
yeah,
If anybody wants,
very
it's
fun.
beautiful.
And before we left, we agreed on a no murder and no abandonment grounds for this trip because we decided we were going to go on this trip and end up together, like permanently, or we'd figure out we wanted to break up. And in the event that it went poorly and wanted to break up, we agreed that we would not abandon the other person on the trails in a national park or murder them.
Yeah.
Just for our own peace of mind.
We would come back together.
Yeah.
I would drive you home.
Yep.
I mean, we were living
and part ways.
We were living in the same apartment complex at the time, weren't we? Still at that point?
No. We each had our house at that point.
Okay.
Yeah.
And then we would drive back from the airport and we would just shake hands and part ways.
But no murder and no abandonment. And so that still stands. So you're safe. And I'm safe.
Yeah. Unfortunately, the trip went well, and here we are on Can I Retire Now?
Yeah.
But yeah, it worked out. But
so maybe review your relationship and see if you also need a no murder, no abandonment clause.
Wow, this one's going to go down the record books.
Anyway, life insurance. Turns out you need it, and probably more than you have.
Yeah, just in case. So, moral of the story here is, hopefully this provided some basic information about life insurance, coverages, what to consider. We'll do a future, more of a deep dive in the different types and the functionality and how they work and strategies. But if you haven't in a while, consider doing a straight insurance review with your advisor. So that just means take your existing policies, have them run. If they're permanent policies, we could do something called an in-force illustration. Means basically you did an illustration when you first bought the policy. Now we can basically do one with its current cash value.
Is it an actual illustration?
Yeah.
That's nice. I like it. Like a picture?
It's a report.
Does it have graphs?
It does.
Okay. That counts. That counts. That's kind of.
And then, you know me, I will draw stick figures and arrows and stuff all over it. Yeah. So I'll sketch it up. But it's something that gives you an idea of how your policy currently stands.
Great.
But also just from a scratch looking at, okay, how much coverage should you have? Do you have enough? Your life has changed. Oh, you have 3 kids now. When you first got policies, you had just gotten married.
Yeah.
Oh, you probably need more coverage. And insurance actually has gotten cheaper per dollar of coverage over the last few years. People are living longer. So per year, it can be cheaper, but it does get more expensive every year you wait. So do an insurance review. If you need help with any of that kind of information, you can reach out to us on sunrisewealthadvisors.com. You can find us on social media. I think honestly, it's you can kind of go down the things to consider of what's my income, do I have kids, do I have other concerns or debts, and you start to get what I always consider a field goal, like from football.
Oh my gosh, there's so many visuals for this.
Yeah, so I always think of life insurance as a field goal. Right. There's a minimum amount that everybody should have based on their own situation.
Yeah.
And there's a maximum. There's a point of where it's like, okay, ease up. Like, you don't need to pay for all that insurance.
Okay.
It's diminishing returns. But like a field goal, as long as you pick a number in between those uprights, you're good. Then you can put that on the back burner and not have to think about it for a while.
I like the not thinking part.
Yeah. If you haven't done a review in the last 3 years, you should definitely consider it. 3 years is kind of that magic number.
Awesome.
So, for more information, like I mentioned, sunrisewealthadvisors.com, Facebook, X, LinkedIn.
Call the office.
Yeah, call the office, set up a smoke signal. We have newsletters. We're sending out a lot of content lately with everything going on. So yeah, feel free to reach out, and thank you for listening and getting through an entire life insurance. Exciting. What happens if I
painful,
die?
But we got there.
Yeah.
So.
Husband and wife. Talking about what happens if one of us passes away.
No murder.
No murder.
No abandonment.
No abandonment. Thank you.
And thank you very much. Looking forward to your next podcast. And thank you for listening to today's Can I Retire Now podcast. Until next time, for Nick and Becky, I'm RJ Malik.